Ladies and gentlemen, please welcome Olivia White of McKinsey Global Institute.
Thank you, everyone, for being here. I'm going to talk about geopolitics and the geometry of global trade, and also about a new McKinsey Global Institute report out yesterday called FDI Shakeup. For starters, the world is deeply connected. Here's an oil depot in Hong Kong. China, rest of Asia, Europe are all highly dependent on other regions of the world for resources, on Latin America, sub-Saharan Africa, the Middle East, dependent for energy, for minerals, for various agricultural goods. And correspondingly, those places, so Africa, Latin America, the Middle East, also the US, depend on Europe, depend on China, depend on the rest of Asia for manufactured goods, automobiles, electronics, pharmaceuticals. In fact, every region in the world depends on other regions for at least 25% of domestic consumption of one and sometimes multiple critical goods. Another indication of interdependency, trade is in fact traveling further than ever. And that's true even over the past several years, even after we've been told that there's increasing regionalization. But here's a field in Ukraine. Geopolitics has been increasingly shaping flows of trade and also of capital. And so we also look at a geopolitical distance. And that's been decreasing. That means countries have been trading more and more with geopolitically aligned countries, not with antagonists. It looks different in different parts of the world, yet when you look at the world's three largest trading economies, so the US, Europe, China, the geopolitical distance of trade of all of those countries has been going down. The US has been trading less with China. China has been trading less with the US, less with advanced Asian economies, and has been trading more with Russia and more with other developing countries. Europe has been trading less, particularly with Russia, particularly in energy, and has been getting more energy from the US, but also from other places. The picture is somewhat different when you look at developing regions. There, geopolitical distance has been staying about constant, and in some instances actually even going up a little bit. So we can ask what's next. And here's where the FDI shakeup comes in. So historically, if you look at greenfield FDI, greenfield foreign direct investment, it shaped global industries across the world. From oil starting 150 years ago to minerals, you see copper mine here, to semiconductors, to electronics, to auto manufacturing. So what now? We find that 75% of FDI that has been announced since 2022 is actually going towards future shaping industries. So think advanced manufacturing, like semiconductor manufacturing, like EV, like batteries. Also think AI, data centers and other AI infrastructure. And also think about the resources that underpin it all. So that means energy, it also means critical minerals. And the fact is, FDI matters in a future shaping way, not just because of the industries, but also because it shifts productive capacity. And shifts in productive capacity shift trade tomorrow. Remember, geopolitical distance of trade has been going down. Now, when you look at the geopolitical distance of announced FDI, it's been going down about 2 times as fast. So that may mean we have more ways to go when it comes to trade and when it comes to relationships across global businesses. Again, it depends on where you are in the world. So first, China and Russia have seen very significant decreases in the amount of announced FDI flowing into them. So well over 60% in both of them, China more than that. China, in fact, in future shaping industries has shifted from being a country that net received FDI to being a net investor across the world. At large, developing regions have seen some increase in FDI inflows, at least in terms of announcements. And this, again, despite what one sometimes hears. This means Latin America, Sub-Saharan Africa, India, and ASEAN have seen slight increases in the level of FDI announced, with real meaningful variation by country, some up, some not. Increases have been bigger, this all compared to the pre-COVID period, in Europe, in advanced Asia, and, importantly, in the Middle East. But increases have been biggest in the United States. In fact, in the United States, the amount of announced FDI inflowing in the 2022 to May 2025 period was up 2x on an annualized basis versus the several years before the pandemic. So a little bit, what does this look like? Now, in fact, what we're seeing is to win globally, multinationals are placing big and bigger bets. So think an LNG investment in Argentina of $30 billion. Data center investment in France from MGX of $10 billion. CATL announcing $12 billion in aggregate in EV and battery manufacturing across Spain and Hungary. And then, of course, the $165 billion announced by TSMC, or pledged by TSMC, for investment in leading-edge chips in the United States. So let me give you a statistic that can help you encapsulate this. Before the pandemic, about 30% of investment in future shaping industries and resources came through so-called megadeals, deals bigger than $1 billion. Today, that number is 60%. Here's a view of what that looks like. So this is semiconductors, and this is the flows of semiconductor FDI announcements in the years from 2015 to 2019. And look particularly at the United States, mainland China, and Taiwan. US was investing outward, or at least pledging outward investment to a range of countries. And China was getting significant inflows, or announced inflows, from Taiwan and from South Korea. Here's today. So you see just the increase in pledged announcements, particularly from Taiwan to the US, but also the fact that you have continued investment outbound from the US, in some instances in expanded ways, and some new countries, India, Malaysia, Singapore, who are getting more money than they had been. And in fact, when you count this all in, you can say, well, how might trade across the world shift and how might productive capacity across the world shift? Well, if these investments are successful, US major leading edge semiconductors will become a real player in the world. Okay, again, if investments in battery production and EV are successful, manufacturing capacity outside of China could go up by at least 4x what it is today. Data centers and AI infrastructure, a doubling of data center capacity in geographies outside of the US and China. And even in energy, where the changes look less significant against the baseline of current capacity, you may well see some really pretty significant shifts in particular corridors. So for example, LNG or even conventional oil corridors from various different places in Latin America, think Guyana, to other places in the world, like Europe. So you can say, where are we going? Important to note that not every FDI investment happens. Every FDI announcement happens, but recent history suggests that 60 to 80% do. An FDI investment that's outsized does not always translate to ultimate outsized exports, but about 65% of the time it does, when the investment is also backed by transfer of human capital, and when it's also backed by transfer of know-how, and when it manages to spur domestic investment. And so one can say, well, what to keep an eye out on, what to think about. One thing is trade and trade corridors. And we have McKinsey Global Institute research that suggests in 2030, depending on what scenario we find ourselves in, a bifurcated world or a world that's more diversified, 30% of trade might slosh from one corridor to another. Economic competitiveness is at play, country by country. So investment today is a powerful marker of somebody's perception, but also whether that investment takes root. Who's able to invest or attract investment in the future will matter. MNC dynamics, extraordinarily important and coming out at play. And finally, business ecosystems. So as the aphorism goes, when others dig for gold, sell shovels. And so in consequence, there's a huge amount at stake, but also a huge amount of opportunity for a whole variety of different countries and different companies across the world. Thank you.